UBS, Switzerland's largest bank, has reported fourth quarter net income ahead of estimates. Manus Cranny is in Zurich today and has been speaking to the UBS CEO, Sergio Ermotti.
First of all, I think that you look at our year was a very successful one. Net profit is up almost 80% to 6.2 billion. Also, you look at the quarter year on year on an adjusted basis, it's up 47%. Of course, when you look at the business mix in the fourth quarter was more challenging for the wealth management and our investment bank. But our American wealth management in America, asset management, and our personal and corporate banking in Switzerland have been showing strengths, and I'm very pleased with the fourth quarter results.
I do want to focus in on one of the lines that you use in the announcement, which is very low levels of client activity, a pronounced risk aversion, and net money outflows. These are serious communications to the marketplace. So is this buckle up and prepare for more in 2016 of the same?
Well, I think that when you look at the dynamics of the fourth quarter and you look into how January started, you could see a trend continuing. Of course, there is a high level of risk aversion. People are happy with their asset allocation in general, but they are paralyzed by this high volatility and also all the geopolitical and macroeconomic news they see.
Help me understand where that paralysis is more pronounced. Is it in your Asian business, your European business, or your American business?
In general, we see in Asia and in the emerging markets a lot of deleveraging. Risk aversion is coming in more pronounced than in other places, but it's a relative statement. I would say that the level of transactions has been quite slow in the fourth quarter, and also when I look into the environment is not one that is basically giving a lot of confidence to investors. Having said that, we are still confident that we can work towards our plans for the year.
Have you had to shift how you're going to run the business in terms of margin requirements, in terms of doing business and banking in the Asian region as a result of China, as a result of volatility?
No, I think that what we needed to do in the fourth quarter was more about sticking to our discipline. For example, when you look at net new money, we didn't really rush to create cosmetic figures that wouldn't really reflect our strategy. Actually, we did the contrary. In the second and the third quarter, we've really looked at deposits and look at structurally loss-making deposits and so in the fourth quarter we didn't go out and buy net new money, for example.
You did see money outflows in the fourth quarter, Sergio?
Yeah, mainly for deleveraging factors and also cross-border regularizations were major effects.
Let's talk about the dividend. This is the good news part of these results for the investor, 85 cents. My question to you, is the market has some hefty expectations of you. The reason why your stock is so valued is a dividend play. 85 cents, that's a beat. Are you backing yourself into a corner? That's my question to you in terms of what the market expects and what you can potentially deliver 2016.
Well, our dividend is the reflection of a very strong year. And also a reflection of a very strong year in our operating profit. So that's the reason why our ordinary dividend goes up 20% year on year, because we had a very strong operating environment in terms of profits. And we are also adding 25 cents of dividend as a special dividend because of the deferred tax asset revaluation. We are comfortable that we can continue to our aim is really to continue to grow our ordinary dividend as a function of us executing on our strategy.
So the market 88 cents and 1.12 is achievable?
It's too early to comment in February on dividend for this year, but as I said, we are comfortable with our position, and we want to continue to fulfill our commitment to pay at least 50% of net profits attributable to shareholders.
Let's talk about negative rates. It's really gathering pace. Japan, Europe, Sweden, the entire shift in the dynamic to negative rates. Where are you, Sergio? Where is the capitulation point for UBS in terms of charging negative euro rates to institutions and negative rates to your Swiss clients?
Well, we are getting used to manage a negative rates environment for, at least 1 year, but even more if you look at certain part of our businesses through the Swiss franc. So we are well prepared to do that. And also you see that in the way we manage our balance sheet and our deposit base. We are already wired to manage this kind of challenging environment. So if the euro also migrates into this environment, we will take appropriate actions to protect our shareholders, and while finding also solution for our clients on how to deploy their liquidity away from balance sheet usage of banks, which, as you know, in this environment is not just punitive from a P&L standpoint of view, but is also very demanding in terms of capital absorptions.